Hello and welcome. My name is Brandon Wendell. I'm a master instructor with Online Trading Academy, and today I'm going to talk to you a little bit about something we can use to kind of watch the professionals as they are trading. One thing that amateur traders or people getting into trading always want to ask is there something that the professionals are doing that we can find out and mimic so that way we can try to increase our potential for profits? Obviously, when they're saying professionals, they're looking at things such as the brokerages or the institutions who are the so-called smart money on the streets. Well, looking at the markets, one of the things that we can do, and you may have heard of this, it's called looking at what's the Golden Cross. Now, the Golden Cross is simply a crossover of moving averages. This will not allow you to find the absolute bottom or the absolute top of the markets, but it does give you a bit of a clue as to when some of the institutions may start to accumulate some shares. Overall, the two moving averages that we're looking at are the 50-period simple moving average on a daily chart and the 200-period simple moving average also on a daily chart. Let's take a look at this chart that I have of ICICI Bank. Looking at this chart, you can see I have the 50-period moving average in this light blue color and the 200-period moving average in that pink or fuchsia color. What happens is that ICICI broke out to the upside. Well, that's a good sign. Obviously, people want to buy those shares, but hold on. Watch what happens when we finally get the Golden Cross. As we go forward, we had a small pullback. Now we have the Golden Cross where the 50-period moving average is crossing above the 200. That is an okay signal, time to buy for the institutions. And watch the acceleration we have of the trend as we continue to move to the upside after that Golden Cross. Sure, there will be some pullbacks after the Golden Cross, but overall, once that 50 crosses above the 200, that's a big buying signal for many of the institutions. And with that institutional support, you typically see an acceleration of whatever trend you have in the markets. Well, moving forward, we see it continued. Obviously, lots of institutional buying and also retail buying as well. When we start to have pullbacks, however, one of the warning signs that there may be some distribution of these shares is when we start to close below that 50-period moving average. As we go forward, notice we had to bounce off that moving average, didn't close below, did we? That was a pretty good sign that we were going to find some more institutional buying right at that particular level. Both the 50-period moving average and the 200-period moving average on a daily chart can be very powerful buying areas as the institutions move in to support price. Once you start closing below those averages, however, things start to get a little bleak for that particular script. Notice here, we've now closed below the 50-period moving average. Might be a warning sign that some of the institutions will start to book profits on some of their trades and start to scale out of their holdings of this particular stock. We go forward and we see now there's weakness in the stock for the first time. As we continue to move to the downside, the stock is struggling to stay above the 50-period moving average as again it is failing to gain institutional support. Overall, we start moving down and now we are testing the 200-day moving average. If that continues and we break below the 200-day moving average, that's going to be almost the death knell, if you will, for that particular stock. The institutions are now going to start pairing out of their positions and look to put their particular money into something that's going to be much stronger and looking to move to the upside. As we go forward, we finally had a close below that 200-period moving average. This stock is in a lot of trouble. We go forward, we see more lows being put in, and the stock is moving to the downside. Overall, if I scroll forward to where we are currently, we're almost at the reverse of the Golden Cross, or what you could call the inverse Golden Cross. When those two cross over where the 50 goes below the 200, it is now confirmation that that particular stock is in a downtrend, and almost no one will want to buy that until the markets start to turn much more bullish. Well, that's one way to keep an eye on the professionals. There's a lot more ways to do that. Make sure you get educated and come see us at one of our courses at Online Trading Academy. Until next time, trade safe and trade well. I'm Brandon Wendell.